I believe that a lot of people concur that Ron Barron is an excellent illustration of an investor with long-term holdings. However, I would invest it if I had more money. Elon has every right to be furious with the short sellers, after all. It is impossible to forgive someone of Bill Gates' caliber for short-selling Tesla. I interpreted that to suggest that even a millionaire like Bill Gates may lose all of his billions. He's warning shorts and will be obliterated. Furthermore, I can't forgive him, therefore I don't blame Elon for not doing so. Hi everyone, today we're going to explore some fascinating investment news. Renowned investor Ron Barron has introduced new funds that are exclusively focused on Elon Musk's private businesses, SpaceX and XAI. Let's examine the significance of this and the reasons behind its popularity. However, before we begin, please remember to support us by liking this video and subscribing to Tesla Stock News. That being said, let's get going. Ron Barron is not just another stock market investor hoping to make quick money. He is a visionary who is engaged in a potentially more lucrative and prolonged game. His most recent action is the creation of specialized funds that allow customers to make direct investments in some of the most cutting-edge and well-discussed private businesses of our day, such as XAI and Elon Musk's SpaceX. These businesses are pushing the limits of technology, from artificial intelligence to space exploration, in addition to being leaders in their respective domains. However, Barron's approach is more than just funding expanding industries. In order to establish a foundation that will support his company for a century, he is looking to the future and beyond. Creating a legacy of innovation, stability, and foresight in a market that is becoming more unpredictable is more important than merely generating profits. Barron is placing a wager on technologies that have the potential to shape humanity's future by selecting firms like SpaceX and XAI. His motivation is obvious and reveals a lot about his business style. Being a part of innovative projects that have the potential to transform entire sectors and even daily life is more important than just making money. In addition to attempting to secure the survival of his own business, Barron is putting his clients at the forefront of technology breakthroughs by coordinating his investments with forward-thinking businesses. This approach demonstrates a thorough comprehension of market dynamics and a strong faith in the revolutionary potential of technology. In a world of finance that is sometimes defined by quick turnover and short-term gains, it's a daring assertion. Other investors may find inspiration in Ron Barron's move, which may be viewed as a lesson in strategic investment. This is especially true for those who want to make a lasting impression and ensure that their businesses have a secure, profitable future. And here's the thing. Barron wants to keep these investments affordable by charging a 1% management fee. That is rather refreshing in the world of high investment costs today. The worst part, though, is that investors' money is tied up for 8 years. Folks, that's a long commitment. Even when SpaceX or XAI become public, the cost is cut in half. Barron seems to be placing a lot of money on these businesses to not just succeed, but to become viral. A 1% fee seems like a great idea, but what if Elon decides to start producing flying cars or something crazy? Is it still a good deal? There is more to Barron's plan. He is laying the groundwork for future investments by increasing his firm's visibility through these special funds. It's similar to using a well-known performance to sell out smaller events. Clever, huh? Elon Musk and Ron Barron sound like a group of wealthy boys. Is this just another rich-get-richer ploy, or may ordinary people receive a piece of that pie? Here's an intriguing fact. He offers tax benefits to offshore investors through Barron Cayman. Barron has made a name for himself by supporting outstanding CEOs since he started his business in 1982 with barely $10 million. And who makes more news than Elon Musk? The billionaire equivalent of a Twitter feud is the insults that Gates and Musk exchange. Take out your popcorn. Let's change the subject and discuss Bill Gates. He recently said he was disappointed that Musk was more interested in culture conflicts than climate challenges. Recall that Gates and Musk have had a tense relationship, particularly when Gates was discovered shorting Tesla shares while attempting to enlist Musk in charitable endeavors. Gates hopes Musk would refocus his substantial influence on advancing green technology, an area in which both parties have made significant financial and emotional investments. It sounds like Barron has the Midas touch when he invests in outstanding CEOs, but are these tech titans overly preoccupied with the spotlight? Short sellers have recently been the target of Elon Musk's ire, which is nothing new for him. He contends that their activities have hurt Tesla's long-term prospects, in addition to causing an unnatural surge in the company's stock price. Musk is not merely an opponent of market forces. His ire is very personal, particularly directed at individuals such as Bill Gates. Given the wider ramifications for climate change programs, Musk saw Gates' short selling of Tesla as a betrayal. For Elon, it's about the globe, not just profit. It's like David fighting Goliath when Elon takes on the shorts. However, in this tale, who is the true giant? It appears that short selling is a wager on failure. When discussing the future of our world, it doesn't feel right. As the dispute deepens, Musk and a large number of his fans are resisting what they see to be nefarious market manipulation. Consider Jim Chanos, a short seller who lost millions of dollars due to his wagers against Tesla. These bad trading choices ultimately caused his fund to fail. This instance supports the claim that disseminating inaccurate or deceptive information regarding businesses such as Tesla is not just immoral, but may also be illegal. Should there be stricter regulations on what may be said about a firm if false information has the power to influence stock prices? Elon Musk's claim that Tesla's flawless autonomous driving technology will destroy short sellers is more than just bluster. It's a strategic claim based on a history of hostile interactions with those who are wagering against his business. Elon has seen short sellers like David Einhorn suffer enormous financial losses over the years, losing billions of dollars. A reminder to the dangers of underestimating Tesla's potential and market durability is Einhorn's startling $8 billion loss from 2016 to 2021. The same lesson is also reinforced by Gabe Hoffman's recent $100 million loss in 2023. It's not a good idea to gamble against Tesla. These instances are more than just anecdotes. They highlight a larger trend in the highly competitive world of tech investing, especially in fields where groundbreaking technologies like autonomous driving are at play. Tesla is changing entire sectors by pushing the limits of what is technologically possible, in addition to creating new goods. In addition to contesting a single company's financial measures, short sellers who place bets against such a business are also risking that market and technological advancements will make their positions suddenly untenable. Furthermore, Elon's cautions have weight that affects investment behavior and market views. His faith in Tesla's potential, particularly in reaching complete autonomy, poses a serious risk to short sellers' finances and mental health. It would be a financial upheaval in addition to a technological triumph if Tesla is successful in perfecting its autonomous driving technology. If such technology proves successful, Tesla's stock value might rise sharply, putting short sellers in a risky situation where they could lose exponentially. The continuous struggle between Elon Musk and short sellers is representative of the larger struggle between traditional market skepticism and innovation-driven growth firms. Every setback suffered by a well-known short seller serves as a warning and a sobering reminder of the dangers of placing bets against businesses at the vanguard of important technical advancements. As we examine misinformation as another aspect of this financial drama, the plot becomes more complex. Mark Spiegel and Andrew Left, two of Tesla's detractors, have also suffered significant losses. In addition to their monetary losses, they are charged with falsifying information to bolster their criticisms of Tesla. This brings up important issues regarding the moral limits of market commentary, as well as the possible repercussions of a contentious profession that combines financial analysis with public influence. Is it free speech to express negativity about businesses, or should it be illegal? What is the boundary? It's interesting to note that not all fund managers involved in the Tesla space are billionaires or even quite so. Think of a fund manager who, although managing about $10 million, mostly relied on his parents' wealth instead of building a fortune of his own. This gives the frequently impersonal facade of finance a human touch. It serves as a clear reminder that not all players have limitless resources, and shorting a giant like Tesla can be both a personal and a professional risk.